gold has reached a record high of $3,391.62 per ounce, driven by renewed U.S.-China trade tensions, a weakening U.S. dollar, and increased demand from both central banks and investors looking for safe haven assets. The resurgence of the trade war began with President Trump imposing steep tariffs on Chinese imports, especially targeting the tech and green energy sectors. China responded by devaluing its currency and restricting the export of rare earth materials, sending shockwaves through global markets and prompting investors to move into gold, which has long been seen as a crisis hedge. At the same time, the U.S. dollar index has dropped to a 3-year low as the Federal Reserve cuts interest rates to stimulate a sluggish housing market and declining manufacturing output. This has diminished the appeal of the dollar, especially among foreign investors, who are now shifting their reserves into gold. Central banks in countries like China, India, Turkey, and Russia have significantly increased their gold holdings, further supporting prices. Inflation fears remain high despite a slight cooling in headline numbers, as core inflation proves to be sticky, keeping real interest rates in negative territory and fueling recession fears in both the U.S. and the Eurozone. Additionally, geopolitical tensions, including ongoing unrest in the Middle East, instability in Eastern Europe, and rising threats of cyber warfare, have added to global uncertainty and strengthened gold's appeal. Institutional investment trends show a clear move toward gold, with ETFs seeing record inflows, such as BlackRock's iShares Gold Trust, which gained $9 billion in the first quarter of 2025 alone. Analysts have responded to these developments by raising their year-end forecasts. Goldman Sachs now predicts gold will reach $3,700 per ounce by the end of 2025, potentially going as high as $3,950 if global conflict intensifies. ANZ has raised its forecast to $3,600, citing risks of a deeper recession and continued geopolitical strife. And Bank of America expects gold to reach $3,500 by 2026, largely due to central bank buying and persistent global uncertainty. However, some analysts are cautious, noting that technical indicators such as the Relative Strength Index suggest gold may be overbought in the short term, which could lead to a temporary correction. Nonetheless, gold continues to outperform traditional safe haven assets like U.S. Treasuries, with BlackRock's global chief investment strategist Wei Li highlighting that gold offers better diversification amid inflationary pressures and rising debt levels. Year to date, gold has risen over 18%, outpacing most major indices and commodities. From 2022 to 2025, gold prices have steadily increased, while the dollar has weakened, showcasing gold's strong inverse correlation to the U.S. currency. In this context, gold is winning the battle against the dollar, as a combination of a softening greenback, geopolitical instability, recession fears, and heavy central bank demand propels the metal to unprecedented highs. While short-term volatility remains a possibility, the long-term trend reflects growing investor anxiety about the dollar's strength and a renewed faith in gold as the ultimate store of value.